Friends, good afternoon to all. Today there will be such an unusual video. Today we will analyze one of the strategies that will be used in my training course. The link will, of course, be in the description. Well, let's, strictly speaking, move on to the strategy itself. So, the first point that I want to note is that this strategy will work on the American stock market. In particular, it will be for stocks, the so-called grow, but in particular we will look at indices from 500. Well, in principle, we will analyze the details on the main stocks that I have here. We will see, accordingly, what results we have. So, in order not to go far away, I do not disclose the strategy itself. The code of this strategy will be in my training course, because my training course is focused more on medium-term, long-term trading. Well, in principle, you can see the current strategy in this case right now on the chart. I have entry points, exit points. Well, let's analyze the criteria of this strategy. So, let's, as a matter of fact, turn on the readings. So what are we going to use? In this case, we will use only purchases, the possibility of setting up a strategy for buy, sat separately positions. Well, from the only buy in Saturday we will use buy positions, because in the long run, in principle, it is the American stock market that tends to grow. The data that will be used for the calculation will be used for the open price, and the value for a certain indicator will be 1. We will also use shoulder-free trading. Here I have included it so that everyone can see that all calculations will be performed from a smaller time frame, respectively. The inputs will appear at the end of the trading day, that is, you will be able to enter the market close exactly according to the strategy data. There will be no remitting, that is, one application will be used. That is, we opened a position, we hold it, closed a position, we made a profit. Therefore, we invest capital in full. We took the capital, it doesn't play a special role here, but we took, as they say, $1 million. In fact, you can enter absolutely any amount here. The fact is that if, for example, you have an asset worth $400, here, in fact, you are buying it for $400. Yes, that is, if you have a deposit of $10,000 there, then you are completely buying it. That is, what is it done for? This is done so that you can actually evaluate if you were trading without leverage on the American stock market. Well, in principle, let's look at the statistics. So, deep beta testing is used here, yes, and accordingly we need to understand, yes, what drawdowns we have. All transactions, of course, will be registered here. No stopovers and take profits are used, that is, there is an entry signal, you enter, there is an exit signal, you exit. And, accordingly, we can look at the stories, what results we have obtained. Since the 93rd year, we have generated 1,100 trades to the current day. Actually a little bit, yes. But since this is day trading, accordingly, we get certain results here. The percentage of profitable cases is 72% of profitable transactions, of which all will be only for a long time. Why the tax? Well, let's see, because in the long term, if we consider the spike, yes, we have a chart here, of course, we don't see it now in this case, yes, but if you look closely, yes, our schedule is mostly growing, respectively, only purchases will be relevant. So, we were losing 32% at the moment. This will be an important factor, yes, because if you use a shoulder, then even with the second shoulder you will have a deposit landing at some point to reach 32% with shoulder 1, respectively, with the second shoulder up to 64, there are 65%, which is actually not good. But at the same time, we have a very good indicator for increasing the bill, that is, the bill increases 24 times. If you look at this profit, yes, we got it from millions to 24 million has grown. Accordingly, here you can interpolate to any digit in principle. The most important thing is that we have the ability to analyze which deals we were on, yes, the losses are such major falling, well, respectively, to sort it out with fundamental analysis. In the current video, we will not analyze the details yet, I just want to talk about the strategy itself. It is quite simple, based purely on technical analysis without taking into account fundamental factors, and accordingly, only purchases are used. If you sort by year, then naturally, there is a more profitable year, there is a loss-making year. Yes, of course, you understand that when the stock market falls, the strategy will work poorly. But most of the time, if you are a long-term investor, such a strategy for long-term trading is quite suitable for you. How much transaction retention is going on? On average, the retention occurs for 5 days, yes, that is, the average number of bars in the trade, since this is a daily time frame, 5, yes, and accordingly, your average profit will be obtained in the area of 0.31%. Profit factor 1 is 67, yes, and as I have already said, 72% of the profitability of the transactions themselves. But if you're interested, let's see how it all unfolded in our years, yes, which years were interesting, which were interesting. We will start with the fact that, for example, we leave the current date, and the previous date when we take, for example, we take this year, we take the month of January, we put the first number, it will automatically pick up the ones we need. And let's see what we have generated for this year. This year we had a drawdown of 6%, the profitability of transactions was 73%, the profit factor of 2 was 26 total transactions were made. Well, in principle, at the moment we would already have 11%. Yes, it's certainly a little different than in previous years, but nevertheless. Let's analyze the 22nd year. We will now return to January the 22nd, choose the first number, and we choose the last date of December, also the 22nd, that is, how much for the year of the 22nd year. You can see that we still had a profitable trade here, yes, for the 22nd year, while the percentage of profitable trades was 69, but the total drawdown was 11% at the moment. Moving on to next year. This will be our 21st. We also choose from January of the 21st to December of the 21st year. Click Generate Report and get. Here we still have profitable trades, yes, 30% of all earned, as many as 83 profitable trades, while the drawdown was about 5%. Let me remind you once again that such trading is used only on American stock markets. In particular, we are now considering a spike. Somewhere on certain stocks, somewhere is better, somewhere is worse, but mostly these are shares from the grow class. Therefore, friends, it is worth remembering. In this video, I will now analyze the spike, and we will also analyze other transactions and other assets. Let's go to next year. We will be interested, most likely, in the 20th year. Also from January we will analyze, from January to December of the 20th year again. It was, remember, yes, coronavirus, and accordingly, we still had a profitability of 18% here, but at the moment the drawdown dropped to 24%. Profitable transactions still amounted to around 73%. Maybe you will have questions, maybe there was an entrance here and then you were knocked out by 100 lows. I must say right away, 100 VOC is not used here. That is, there is an input signal, you enter, there is an output signal, you exit. Everything is clear here within the framework of just such a strategy. No stop losses, no profits. That is, it is the opening of the transaction, the closing of the transaction. Yes, it is possible to configure all this in time. We go into the 19th year, let's look at the 19th year. Also from January to December of the 19th year. Select, click the general report and watch the 19th year. With a drawdown of 6%, we had a profitability of 83% of transactions and a total increase of 24% from the beginning of the 19th year. Well, let's see also the 18th. It was a more difficult year, but nevertheless, I think it will still be interesting to see how the whole strategy worked in the 19th year. But just in the 19th, in the 18th year, who remembers it, yes, we just had a drawdown of 18% and the profitability was minus 10%. That is, the 18th year was unprofitable. Let's go to next year. We are considering the 17th. Also from January to December of the 17th we include. Not the 31st of December. We are looking. In this case, our 17th year was very good, but if you count, yes, then you have an increase there for the 17th year plus 14%, then you lost 10%. That is, in principle, 1 year of this selection, yes, of course, was not very good. You can come back a little earlier and also watch the 16th year. I think, in principle, it will be appropriate within the current allotted time, yes, which I want to take to this video. We also take the 16th year. The 16th year, with a drawdown of 8%, we had 9% anyway at the end of the year of profit, which is also a good percentage of profitable transactions, 64%. Consider the 15th year. So, also from January to December and we will generate our report. In this case, we had a landing of 12% at the moment, 63% of transactions were profitable, and by about the end of the year we still earned 11%. Yes, this is, of course, not much, but again, without taking into account the leverage and without taking into account fundamental analysis, these are very quite good figures. Well, friends, come on, I think this video will actually be enough. Let's turn on the opportunity once again, yes, to analyze the long-term strategy, yes, that is, since the 93rd year, we see that the main drawdowns were left here in the area of the 314th transaction. We can look at the dates, that is, approximately when we had the maximum drawdowns. Let's say, from 317th to 324th. We will go to the trace list, scroll through and look at the 317th deal, where we had her. Let's scroll through and see the year where we need to pay attention. It was the 2002 year. Yes, in principle, here we see what kind of deals we had, that is, at what price it was opened, and everything, respectively, we can analyze. Well, in principle, after that, we had certain drawdowns on the 24th, 324th deals, but then they still grew. In principle, I think it's enough for this asset, for SPIV. We will look at other tools, but this will be a different video, so subscribe to my channel, like it and write in the comments what you think about it. Well, RTM Eve was with you and earn money, for now.